Just let me know when they've all kind of hit and that we're ready.
We are live.
Okay. Well, good afternoon. I'm Mark Hernandez, and we're going to be working on the federal audit findings. This webinar will be recorded at the same time. Finian will be administering the webinar and looking at the questions that come in. So if you have questions, please type them into the Q&A box. And what we'll do is I will answer them as they come along. But at the same time, we have about 15 to 30 minutes of Q&A at the very end reserved for this webinar. So we'll get them either way. Why we like to have the Q&A, the questions written down, is that we will then take that information and we'll do a Q&A document that we'll send out to everybody. We tend to do that about 2 weeks after the webinar for the main reason that there's people that will send in questions after this webinar, and we like to capture those questions at the same time so that we can give the full perspective of all the questions that were provided at this time for this webinar, and we'll be able to give you all that in a Word document. At the same time, Crystal is our kind of administrator that will, she's the one that cures everything when we have issues, glitches and everything else. So she's with us to help us along at this point. And we'll start at this time. So today, like we said, is the federal audit findings. What we're trying to do here with this webinar is to provide you with information so we can mitigate audit findings. And the part about mitigating audit findings is naturally you're going to work on any vulnerabilities that you have and be fixed and ready before an auditor comes out, either your external auditor that does your annual audits or an auditor from your funding agency, whichever funding agency you have. Some programs have multiple funding grantors out there, so you may get auditor from the governor's office or the office of the attorney general or HHSC. But this way we can kind of mitigate those things, and hopefully we can keep all the money still within your organization. Now, the acronyms we're going to be using for today will be the Code of Federal Regulations. That's the guiding document for all grants in the federal awards that have. At the same time, the state has UGM's Uniform Grants Management Standards, and what they do is they actually codify the CFR. So if you know the CFR and you have a state grant, then you're in pretty good shape if you're having to worry about state regulations in that situation. The FSR, the Financial Status Report, is a federal term that's been used, and typically all pass-through entities, state agencies, pass-through entities like CASA that does a pass-through for the governor's office, we use this kind of term at the same time. It's when you request reimbursement. Now for the governor's office, you'll be using their e-grant system to get into the system to go ahead and ask for reimbursement. But if you ever hear FSR or a financial status report, now you know that that's just the federal term and everybody pretty much uses that. We're also going to have some stuff from last time that was the time and effort report, because personnel is probably 80 to 90% of most awards. So we've brought in a couple of those screens at the same time because that's what the auditor would be looking at. So you can see that E-Verify is there when we look at that part. I-9 form is also there from the last time too, which is, you know, gathering the information for your new employee. PARS, as we call it, is personal activity reports, which is basically your timesheets and time and activity reports, and then year to date. Now, the financial acronyms that we have over here would be for general ledger, accounts payable, accounts receivable, payroll journal, trial balance, and subsidiary ledgers. Now, subsidiary ledgers can be any of the others that are that support the general ledger. So it could be your accounts payable, receivable, payroll journal. Now for the acronyms here, I put it as G/L, just so it's easier to see at this time. Yes.
Mark, the slide is not visible.
You can't see it?
No.
Let me go back. Can you see that?
No.
I think you might have to reshare your screen, Mark.
Okay, let me do that. Go back. Share. Screen one. There we go. Let's look at that. Let's see if we can share. And we'll go back to the very beginning.
Better.
Hey.
And
so let's go back to the very beginning, and we'll do it very quickly. So again, we're in the federal audits findings.
Mark,
yes.
Mark, the slide on the side is visible.
Oh, I did switch that, and I don't know why it's not taking it. Let's try one more time. Well, in fact, let me stop share.
Okay.
Let's share screen again. Let's go to screen here. And now, can you see the full screen?
Yes.
Okay.
Yes. Good.
Okay. Well, good. So here we go. Again, we talked about the acronyms that are here that are being used for this webinar. At the same time, we also talked about the financial acronyms. So we've talked about the general ledger, accounts payable, accounts receivable, payroll journal, trial balance, and subsidiary ledgers. The importance in this is for two bases. One is for your fund accounting system, and two, it's because anything that you have that you send for reimbursement, that's what the auditor is going to look at. So they're going to look at those subsidiary ledgers besides your general ledger. Now, what we plan to do is to go over these 6 parts that are the 2 CFR. We'll do a brief synopsis of what the 2 CFR is for audits and monitoring. Then the next 4 are 3 of them will be the ones where you'll have typically more findings than anything. So one of them will be, we'll discuss about reconciling between your financial reports and your FSR, which is where you're requesting reimbursement. That's where we find a good number of findings and everything. Fund accounting is the other part that we were just showing with the subsidiary ledgers and everything else. That's a requirement that all nonprofits and more for grants that you need to allocate your dollars specifically to that fund itself. Supporting documentations is another area where auditors will be looking through that and seeing that you have the proper support for the expenditure that you have on your financial records, either your general ledger or your subsidiary ledgers. And then we'll also talk about contract management, which has become a new factor in the new 2 CFR. Before, when you were doing contract management, all you needed to do was just ensure that the invoice was adequate and you can go through that and you're okay. Now with the new 2 CFR, it requires a little bit more work, and we'll actually share a spreadsheet that will help you in the sense of a template that you might be able to use. And then finally, we'll be talking about transaction obligation dates. This is very good to have so that you can figure out whenever you're doing a transaction, is it in the area of period of availability? Is that within the direction of your starting date of your grant to the end of your grant? Because sometimes without that, then findings can happen. So we'll have that discussion at the same time. So with the brief synopsis of the new 2 CFR, these are the kind of main components in here. One of the things would be financial management policies. That's under 200.302. I just updated this since I sent y'all the PDF copy. So if you want to write down that part, that helps you so that if you need to go back and get a better understanding of the financial management that needs to be done, then you can go to that specific citation and you can read through that. But it will have the information in there, which includes the policies that they need to do. Now, audit thresholds, for which is in 200.501, starts the audit part of the 2 CFR. And one of the features in there that with financial audits that are for the federal grants, you need to hit a threshold. The threshold is $750,000, and that's of expenditures. So you may have more than $750,000 in award, but in that year, you may not have the full $750,000 of expenditures. Then the CPA would then say that all you need is just a financial audit. This threshold hits for a couple of things. One, it will determine whether you need to have a single audit. And a single audit is comprised of your financial audit, which is on your books, your general ledgers, your financial statements. And then the other part of the single audit is the compliance part, which the auditor has to go through and ensure that your organization is complying with the rules and regulations of your major grant or major project at that point. So we have that we need to kind of look at. If you have any kind of issues or ideas or questions about how audits are done, you can go into the 500 series and you can read up on those things. Another interesting part of that is that there's also a state single audit, which is also at $750,000, but it has to be of state expenditures. Very few organizations actually have both a federal single audit and a state single audit. TASA just so happens to have that because we do have state awards and federal awards where our expenditures hit both thresholds. And now one of the things to think about is that it's not $750,000 of both federal expenditures and state expenditures. They're segregated so that way the auditor will look and determine whether you need to have a single audit on the federal side or the state side. Now, one of the other things that happen either in a financial audit by your external auditor or by your auditor that's from your awarding agency, they'll look at things, and if you have a finding in one area, then they will determine that you'll need to do a corrective action. 200.26 is the definition, if you want to look at that. 200.508 is actually the citation and how to do the corrective action at that point. The other things that the auditors, and in this federal part, there's remedies of non-compliance. Now, non-compliance would be naturally what it says, that you're either out of compliance with either a finding or other things. This part itself is that if you're out of compliance for a lot of different reasons, there are remedies that the funding agency can provide or describe on y'all that might be from a financial hold, might be some other things that go along, all the way up into termination of the grant. If the remedies can't be taken care of, then naturally their last remedy would be to go ahead and close the grant at the same time. The last thing, which is in 202.07 for the 2 CFR, are specific conditions. It used to be called special conditions, and a lot of people would have that if, let's say, they're doing their grant award from a funding agency and you're missing something like an audit that you should have had presented, or let's say, that you have something that's missing out of your award or other areas like that, they might put on to your federal award that there is a special condition, or now which we call specific condition, that you will not get the reimbursement until you meet that specific condition. So those are kind of the federal parts that go through that will work both for your funding agency that's auditing you, and then also for your external auditor. Now, here's one of the main parts of findings that we have from both the federal and the external auditor. Typically, this is more on your federal side, where your funding agency is doing their monitoring or audit of you. Could be an on-site or a desk review. And one of the first things that they'll do is, again, they'll be looking at your FSR. The FSR is what you have requested at that point and that you're being reimbursed. Well, the auditor is going to look at that part and then start drilling downward to your own records. So one of the things that we see is that the general ledger or the subsidiary ledger doesn't reconcile with the financial status report, your request for reimbursement. That's where most findings will have question costs, because let's say that you ask for $1,000 more on your request for reimbursement, but your records itself doesn't show that in your general ledger or subsidiary ledger that extra 1,000. Well, if you can't demonstrate that you've expended it and have the proper support, well, then naturally you're going to have a finding in that situation, which would be a question cost. So most auditors, especially from funding agencies, tend to drill in the sense that I call downward. They start at what you're requesting, and then they go downward through your books, all the way through your general ledger, your subsidiary ledger, and then your supporting documentations and everything. So these are the areas where you'll see where if you shore that up, then you've covered yourself for any potential finding in that situation. So if you're getting an audit done or an engagement from your pass-through, you should look at your general ledger or your subsidiary ledger and make sure that it equals up to what you've requested in that situation. That's a good way to kind of do a preemptive audit on yourself and make sure that you've looked at your vulnerabilities at the same time. One of the other things that happen is you may get the general ledger right, but then your subsidiary ledgers don't reconcile. Well, that's the other part of the supporting documentation that you need. So you need to look at it throughout the system in that process. So if we work through your part and ensure that what you have on your financial records itself equal up to what you have on your FSR, you're in pretty good shape. So that's where we want to try to mitigate those areas. Now, fund accounting, I've seen several findings on that. And basically what fund accounting is, it's the part of the accounting for nonprofits, governmental units, and everything. And why we use fund accounting is that it's for transparency, because governmental unit or higher education or nonprofits are not looking in the sense of the bottom line like a for-profit. What is the bottom line? What is the income or revenue that's generated after all your expenditures? What happens is the award comes out, and that award is for what you plan to do, the activities of the grant, everything that goes to that grant. And that's what fund accounting is it actually segregates the dollars from your general ledger into your fund account. So if you're using QuickBooks, it could be something that you have a sub-account that might be there. A class might be one of the ways you use that. Other people use a different term for class or subclass, but that's where you actually provide the information on, let's say if you have a VOCA account grant, then you would have a VOCA part as your subsidiary ledger that covers all your revenue and your expenditures for that VOCA grant. If you have multiple grants, then let's say if you have two at this case, let's say a VOCA grant and let's say an OVAG, other victims assistance grants, then you would have two separate different subsidiary ledgers that would deal with just making sure that you properly allocate those dollars to those specific grant funds. And that's what the auditor is looking for. So when you get an engagement letter or other things that they're requesting information and they want to see only their dollars, that's what they're talking about, your class or trial balance or other things that fit for just that grant itself. Did you actually record it separately and can you account for it? Because that's where the transparency is. The last part of that is, again, like any other thing, as you go through your subsidiary ledgers, they need to reconcile back to your FSR. That could be your payroll register where you've now put in your personnel to get reimbursed. Well, does that payroll journal work? Does that reconcile to what you have in the e-grant system? Or let's say with the Attorney General's office, they have a spreadsheet that they give you that's a hard copy. It's an Excel, and that should equal out at the same time. And then finally, we'll get into the supporting documentations that are not on your financial records, but your actual supporting documentation. So supporting documentation in this case is all the other things that come up once you get out of your financial records. So that would be an invoice, other things that support what you have now put into your financial system as an expenditure in that regard. We'll see a lot of those kind of situations where there's a lack of supporting documentation. The lack of supporting documentation by itself would mean that without that, then the transaction didn't exist, and you'll have a finding and more than likely a question clause in that situation. So you want to demonstrate that you're complying by having these supporting documentations. Again, supporting documentations could be, let's say on payroll, would be timesheets, actual payroll registers that would go through that. Even the fact that an auditor would look at the canceled checks in that kind of situation. Other supporting documentation could be invoices or contracts. Let's say you have a contract with the counselor. Well, then the auditor would like to look at that contract to see that the contract is in the period of availability, which is your grant period, and then the invoices that come in on the monthly basis if it's a monthly expenditure in that situation. You want to shore up, and what I look at it is, do you have the actual hard document? Because typically your supporting documentation is a hard document, an invoice that's come in, a timesheet that's there, a contract that's been signed, other things like that that are outside of your actual financial records, which are your general ledger and your subsidiary ledgers. So if you can kind of work in that situation to ensure that you can kind of almost do an audit trail of yourself, that whatever's on that register as either your subsidiary ledger or other ledgers or even your general ledger, that you can actually point down to the supporting documentation. Now, auditors, like I said, typically will go from kind of a downward progression, which would mean they'd start with what they have, which is what you requested, and then go through your financial system and then down to your paper copies of your supporting documentation. I have seen auditors do it the opposite direction because they want to test the system. And that's what they're doing when they're actually doing their engagement. They're testing your system to see that everything fits and is adequately recorded. But I have seen auditors actually start with, let me look at your supporting documentation. Now let me see how that goes into your general ledger or your subsidiary ledger. And now let me see how that is to your trial balance and how that goes into your FSR. So they can do it one of two ways. So there's not a true set pattern, but most of the time they will go the opposite direction because they have that information to begin with. So if you're caught where the auditor is going in the backwards sense, don't worry about that. It's still the same thing. They're just going in a different direction and testing the system. Now, like we talked about in the time and effort webinar that we had, reporting webinar, payroll is the largest amount of the award. So we wanted to get this back in here. This is actually a slide from that webinar. And as you can see, they're going to look at the documentation for your time and effort reporting. Do you have an employment contract or employment letter of agreement? What is the job description for that employee that's on the grant? If they're a counselor, then you would have a counseling certificate or other things. And then naturally, they'll be looking at your payroll distribution journal or your payroll journal, as most people say, and see that that all fits together. That's what the auditor will be kind of going in their direction. Here's an example of what an auditor would do is they'd have their spreadsheet using Excel or something like that. And they're doing now a timesheet analysis. So when they're looking at that, they'll look at your timesheet and then basically, did you meet the 2 CFR, which is the guiding documents for how you record time? Is a position filled when it was charged? Was the report, your time and effort report, after the fact? Does that timesheet actually match with the correct month that you have? And then actually the signatures of the employee and the personnel. Now in this example, you can see that there was a no on both program manager and program coordinator. And that's because the timesheet from the description shows that not all the time was put on there. They all, in this case, more than likely, the employee just put down the time that was on the grant. And a lot of times, a lot of employees have dual funding. So there's a missing piece to that. But the actual citation and regulation for timesheets would be that you report 100% of that person's time. So that would be how you would see the finding that comes out. Then the other part in this example would be that the supervisor didn't sign one of the program managers. That would be a finding. I kind of consider it in that situation more of an administrative finding. You probably won't get a question cost associated to this type of finding, but I have seen auditors be very stringent and would say, no matter what type of finding it is, it's still going to be question cost. But in most cases, most auditors are reasonable. They would give you a finding, but they probably would not assess a question cost in that situation. Now, this example was also in the time and effort report reporting webinar that we had. Also on there was the payroll analysis. And again, since payroll and personnel is so big, we wanted to go back and show this again. And this helps you to find ways to see if you have vulnerabilities and how you can then build that so that you can shore up those vulnerabilities and then mitigate your findings. So in this case, in payroll, they would be looking at the award, is it reasonable and necessary? Well, typically, you know, the reasonable and necessary is what would you give to an outside person coming in as an employee. Another thing that I would demonstrate in that situation if an auditor came in is say, well, we were awarded those dollars for that employee, and naturally the funding agency evidently decided it was reasonable and necessary that they would award us that amount of dollars for, let's say, an advocate or other things like that. That's another backup to your reasonable and necessary. They're also, again, looking at billing time, whether it's in the current contract period, which is your period of availability within the grant itself. And then is it properly supported either by your timesheets and your general ledger or subsidiary ledgers? That's what they're looking again for. In most of our grants that are crime victim grants, either VOCA, VAWA, OVAG, any of those typically do not allow for overtime paid. In some other grants, say for HIDTA, which is high intensity drug trafficking or area, they do have overtime because most of the time in that grant, the police are doing overtime because they're doing stakeouts and everything, and it's acceptable in that grant. But in most grants, it's overtime is not paid, so they're looking for that situation. And then the last thing that the auditor is next looking for is that you're not double billing, that time was not billed to another grant. Personnel files, again, was in the other time and effort reporting webinar. The auditor, again, will be looking at that so you can see how they're building their spreadsheets to make sure that the compliance is done on each one. So as you can see over here, is there a job description that's there? Did the employee sign a confidentiality agreement, acknowledgement of personnel? You know, again, we're going back to the I-9 and E-Verify. They're both together. The I-9 just provides you the information for at that time when the person has started your organization, they need to fill out the I-9. But then you need to go to the next step and E-Verify, get onto the website and make sure that everything's okay. One of the things over here we haven't started is staff evaluations. Some organizations may do every 2 years. Others may do it once a year annually. Some may do a probationary period and then have an evaluation before they go on. Whatever's in your policies and procedures, that's what the auditor is going to be looking at. So if you have it that you're doing a probationary period and there should be an evaluation before there's a termination or the employee goes on, that's what they would be looking for. If you have it as an annual, that again will be what they're looking for. So ensure that when you're doing evaluations, you go back to your policies and procedures and make sure that you've got that cleaned up. I've seen that before where policies and procedures will show that they're done annually, but as my auditors have gone out, it's only done once in a while, and it might be 1 year, and then 2 years have gone by, and then there's another evaluation. You'll get a finding because you're not in compliance with your own policies and procedures as we go along. Acknowledgement of training, that's a good part for also travel, in the sense that you would see, if you're going to a conference, you would like to see something as acknowledgement of training received, an agenda, anything that would work as the supporting documentation for that. And then the personnel records should be maintained on a grant period. When we talk about that in your personnel files, there's some things that should be there at all times, which is for multiple grant periods, like, you know, the job application, other things that go in there that will stay there throughout the life of the employee being in your organization. But then there's other things like training and other things like that that are done within that grant period. You should keep that in your folders for the records retention, which on federal grants, it's 3 years, and that's 3 years after the close of the grant period. So in that sense, when you're talking about records retention, not only is it at the end of the period of your grant, then there's closeout, which is typically 45 days, at the most 90 days. And once that closeout is set, then your records retention then kicks in for the time clock that works. There are other costs that we've seen in the sense of for supporting documentation, and here's some of the things. A lot of it would be travel. As we go along, there'd be the meals, lodging, transportation, other things that go into that part. Mileage, if you're doing work like an advocate that goes from one place to another to provide services and everything else. I've seen before the old mileage logs that have been put in there. A lot of people have transitioned to, let's say, a Google map and just go point to point and then print that out, and then that's the mileage that they do. I know there's some organizations now that are using apps that have that capability, and that's perfect to do. Just anything that kind of parts and keeps the record of your mileage that the employee is going to claim for travel in that situation. The other things that you would need to know is, you know, the dates on your invoices, things like that. Those are the other costs that come out. It could be services. It could be for purchases like materials, supplies, other things like that that could happen. Those are the other kind of costs that are involved. typically other costs are in either travel, if it's travel in their budget, or other DOE, which is other direct operating expense. And then again, we talk about detailed meeting, training agendas, anything that supports that you had to travel for that kind of meeting or agenda, that would be your supporting documentation. And you know, those should be kind of after the fact for training events. The new part of the 2 CFR, now that we've gotten out of the kind of supporting documentation, this is part of supporting documentation, but it's the new part from 2 CFR. Before, when you're doing contract management, usually what the auditor and other people would look at is, okay, did you look at the invoice? Did you make sure that it looked right, that everything's in there correctly? There's no double billing, other things like that. And then you could just sign off on it. And in most cases, before 2 CFR, that was as far as you needed to show as documentation for that. Now, with the 2 CFR, they want a little bit more than that. And I've seen that some programs have now gotten findings because they haven't gone that extra step. So one of the main things that you have in here is, you know, naturally, if you have contract management, that's typically for services or for goods or other things like that. Services are one of the big areas where you need to do a little bit more than, and we'll use the same example of a counselor that you hire on either as a company or as an individual to do counseling for the victims. So, you know, it needs to have that part of the contract that, you know, about the reimbursement. You need to have a contract as to what the services are, the scope of work in that situation as you work through that. And, you know, that's an agreement that you have with your vendor throughout. You can find templates that are good in that kind of regard. If you can't find one, you can always contact me and I can show you a template that might be good for a service contract, like with counselors, your CPA if doing the audit, things like that. Let's say legal services. A lot of organizations use legal services for not only for their corporate work of their nonprofit, but also for other things like TROs and other things that go along. So the contract management is now a little bit more than what you have. And what we'll get to, again, you know, if you have with professional services, certifications or license are always good to have backup in there. So now we're going to look at the actual thing. We have a worksheet. I sent the worksheet out. It's in Excel, but basically this provides kind of the process and kind of the notes that we'll go through to ensure that you're doing the extra step of that contract management in that situation. And in some cases, a supervisor approval will be done. So if you have that up, I've got it on my slide over here, but that might be hard for you to see. If you want to pull that up on your own computer and look at the Excel documents, look at it a little bit bigger, you can do that at this time. Again, this is an Excel, and what we have is naturally there's the organization name. You can put that in. This is kind of a template that you can use. You can always modify it to what fits your organization, the month and the year and everything. Then on column A, what the first thing is the type of monitoring. So in the type of monitoring, you can see in this example, there's a desk review. The other type of monitoring, just like when you're getting monitored, is on-site. Now, typically on-site for a vendor usually doesn't happen unless there's some concerns that you have about services and other things that you really need to go out there and do some sort of, you know, records review or direct observations, just because whatever the invoice says and what you're talking to the vendor doesn't match up, then you may want to go to that extra part. But in most cases, I'd say 99% of the things, you can get that information from a desk review. Now, in the desk review, it could either be monthly or quarterly, depending on the billing itself that's in there. The monitoring date is actually the date that you're actually performing this event with the spreadsheet and you're reviewing the invoice and everything. The contract monitor, in this case, I put in 3 different contract monitors, which in most cases for counselors would be an advocate or some person in the organization that deals with the counselor on a kind of day-to-day basis. You could put their initials in there, and you could put it as their name and then their initials so that you can fill out the form in that situation. And then naturally the vendor name. That could be, again, with the counselor, it could be an individual, so you put the name down. Or if that individual is in a company, then you put down the company name as you work through. And then now with the spreadsheet itself that you have, you can see that in this case, what we're doing is we're showing what was on the invoice itself. So you're taking that invoice that the counselor has put, submitted for you to pay back to them for the services that they provided the victims in this case. And you'd see the counselor's name in that direction. You'd see the data services that comes from the invoice itself. The client number, a lot of times that's in the invoice itself. One thing that I would ensure that when you use that client number will be okay, not social security numbers or anything that go directly to the client because of personal identification protection that you need to have for your victims that are out there. Then you'd show the time spent in that one services in there, the location in that case. When you see this whole thing as an example, the counselor is either working sometimes in your organization as in the office, or it might be out on a satellite office or in their own. Here we just show it as office, and then you can see the location outside of the office at the same time. And then finally with this, you can see that here we have the example, there's 2 different invoices that came in, and now you're going to pay for it. And this is where your contract management will show that you're doing a little bit more. So you can see in there that the first invoice is 33116 and the second invoice is 43016. Those are the 2 invoices that came in, and now you're doing your contract management of taking care of this. There you can show that there's no evidence of additional billing in there, which you can probably see, or if you're talking to the vendor themselves. Now the monitoring notes in here, I think, is the part that really gives you that supporting documentation that the auditors are looking for, specifically more for your funding organization that comes in. So your funding agency, whether that's VOCA or whether that's the OAG or HHSC, you would show here, and here's how we documented it in this situation. CW could be the advocate, and then it shows that review the invoice and discuss by phone counseling services. So you've gone that extra step in that process. It could be by phone, it could be by email, different ways that you can document that would be in there. Some auditors may actually ask for a little bit more support than just this. And if it was a phone, you could show a phone log that you contacted that person at this time or whatever. If it's email, then you would keep the email around too, so that you'd show that the supporting documentation was the email where you and the counselor had some discussions in the email about services, and that the invoice, that the services were actually performed, and what else. In this case, a lot of times the advocate or others are going to be talking to them anyway about maybe having additional counseling services or plans or other things. So you can incorporate that very quickly into this kind of monitoring note and make it kind of a short kind of term thing. You don't need to write a book or put a lot in there, but it shows that extra step that now TCFR is asking for. You can see there the approval by whoever would be approving this document as an invoice for the support to that invoice. It could be your accounts payable person. It could be whoever you have in your financial that's doing that with the date approved. The additional notes in here You can either put additional notes that you may need to add into there. One of the organizations I worked with on this actually had a supervisor reviewing it. So it could have been, you know, the CFO or the financial manager or something else wanted that extra internal control, and there would be the box where they sign that they've reviewed it, the form with the contract manager and that documentation. So this gives you kind of the basis. You can modify that whichever way you'd like for your type of situation with professional services. If you'd like to discuss anything with me, we can always work out a different template for your specific organization. But I thought overall this is a pretty decent template for organizations to work with, and it's a good starting point. So that gets you through the kind of contract management, which we've seen audit findings happening. And this way you can give that additional support to that and mitigate your findings. One of the other things that happens is with the new TCFR, there are procurement methodologies and rules that you have to go through to work out your procurements that you have. Procurements could be procurements of services, procurements of, let's say, materials, everything else like that, that you might need. And in some cases, if you have let's say a HUD grant, it might be a procurement for a building, whether you're building it yourself or doing other things to it. That would be the methodology. There's actually 5 different methodologies, and we'll go over it in our procurement worksheet so that you can justify. The worksheet itself, I think, helps to give you that whole part of the procurement of the item, and it provides a lot of good documentation on the approval and the process. So as we go through with the procurement, here's the procurement worksheet. Again, I sent everybody this attachment as a Word document. You can put it into an Excel if you want, or leave it in Word. But this is a pretty good template in this process. Now, as you can see, you have the organization name, the procurement worksheet. You can change that to whatever fits your organization's need. The date that you're actually starting the procurement, the employee that's in charge of that process. And here's where we get into the methodologies. Now, there's the 5 methodologies, which in most cases for most of our programs right now, most programs are going to be in the micro purchase, which is purchases up to $10,000. That's the new threshold that's come out at this time. The original was $3,000, so they've actually grown at this point. We're going to talk about that in a minute also for single audits. So there's a new feature that's coming out in November, in the next month. Then you have the small purchases. Anything smaller that reaches the $10,001 up to $250,000 would be a small purchase methodology. There's a little bit more work that you need to do in your procurement when you do that. And then everything over 250,000, there's actually 3 different ways of the methodologies. One could be a competitive bid. You just put out an RFP, request for proposal. If you're actually doing this in a situation that you're being a pass-through, you can actually use that competitive bid, and some people will term it an RFA for request for application in this situation. But in most cases, it's an RFP in that situation that goes through. And that will be your competitive bid. That's the one that you really have a lot of documentation that you need to do. Again, like we were talking about for HUD grants and everything else, then you would use a sealed bid that's greater than 250,000. Sealed bids are usually for real estate, property, buildings, things like that. And that's where the contractor you'd have several contractors that would submit a bid that's sealed, and that you decide which one's the best at that point. The last one is non-competitive bid, which is greater than 250,000. Very rarely would you see this happening. If you check that box, you will need to have a lot of supporting documentation to defend the methodology. Typically with non-competitive bids, where we see it more than anything, it's when it's an emergency in the situation, let's say with hurricanes or fires or other things, wildfires and everything else, where you need to have services provided to help with that, and that the reason you're going non-competitive is because there's the value of loss of life. You have to do this quickly. You can't wait the normal competitive bid of 30 days or longer to do this. That's where you typically see where non-competitive bids. The only other way that you see the non-competitive bid, if there's a very specific vendor that only does that type of services or work, then you can do that. But that's very rarely done because of the fact that most vendors, whatever it is, they may have a unique part of their industry, but there's typically more than one person that actually does that services. So it would be hard to justify a non-competitive bid if you're saying, let's go with IBM for whatever reason, or something else. Well, there's another organization that, or another vendor that can do the same type things. So an auditor would question you on that. So I'd be careful about using the non-competitive bid. Now, the good part is for most of us, again, with the awards that we have, most of our purchases are going to be in the micro purchase, which is the smaller amount. Now, one of the things, and here's where the new 2 CFR has a new update to that. If you have a single audit, like we talked about earlier, where it's over $750,000, the auditor in their schedule of findings and question costs has one question down and close to the very bottom that they have to identify whether that organization meets the low risk threshold of a single audit. So, and with most CPA firms, they're fairly conservative and they're risk averse. They don't want to have litigation on their work that they have. Most of the time, even if you have a single audit that doesn't have any findings, no question costs, nothing like that, they may not decide to give you the low risk because their own risk tolerance, and they'll say moderate or something. If you have the low risk, that definitely gives you the ability to actually take your micro purchase up to $50,000. That's one of the new benefits of the 2 CFR. And the rationale behind that is that naturally, if a CPA firm, which is a third-party extension from you, if they determine that that's it, and they determine that it's strong enough that they're willing to risk litigation over this and cost of litigation, then you're really determined to be a low-risk auditee, and you get that advantage of now increasing the micro purchase from $10,000 to $50,000. Again, in this part, we have date of purchase. You may want to change that to date of award, that you're actually awarding the contract or the vendor at this point. That might be something you may want to change around. You do have the items that are going to be in there. Let's say you're doing a complete overhaul of your phone system. That might be something that you would put on there. And the cost per unit, units, and total cost. And then once you've described all that, and then your total dollars, those total dollars will actually be your key to look back up to your method of procurement and determine what kind of procurement process you need to do at the same time. Now, again, most of the time it's going to be over about $10,000. If it's greater than that, but still under $250,000, then you need to do the small purchase. Now, the procurement method information, I would put in there, first of all, even though you check the box of what procurement method, I would go ahead and put it in there and state why you're using that. So it could be a simple note of using the small purchase since purchase was, let's say, $25,000, which goes in between the two. micro purchase and into the small purchase. That kind of already lets the auditor know that you know what you're doing about your procurement methodology. That's a good way to be safe and mitigate findings. Then the other part of it is then describing the kind of the procurement methodology in that situation. For small purchases, all you need is some cost analysis that would be done, and you'd provide that kind of information, searched online, looked at other industry standards and everything, and determined cost was at such and such, decided to go with so-and-so, and that would be your methodology, how you defend it. For micro purchase, since it's usually that low, and sometimes would be for things like a laptop, just one or something like that, that is less than the 10,000, then you would put that in there, and you put something of why you picked that vendor. It doesn't have to be much because the threshold for that is lower. I have sent out what I call a white paper that describes what are all the conditions that you need to meet for each of those procurement methodologies. If you want that white paper again, I always call it a white paper, but it's just kind of what we describe as the information that you need for that particular thing. In this case, would be procurement. I can always send it back out to you. And then finally, then you'd have your approval of the process. So not only do you have who did it, why you did it, the information of the cost and everything, but the final end, which is you're closing that loop to mitigate any findings, is where was the approval? Who looked over it and what the internal control is for that kind of approval. The approval signature actually gives you that last bit of internal control. Somebody has actually reviewed and has now approved the reason why. And hopefully, when they sign that they know that, okay, we know what kind of procurement method we used, we know what we're buying, and then finally, we know what we did, how we got to that decision. Is really what you're documenting for an auditor, and that really completes your internal control. Finally, one of the last things that we have is that where I see findings happening are dates of obligations for transactions. And I think this is one of the things that you can always have close by your side when you're not quite sure when to book it or when the liability happens. Certain issues come up when the auditor is looking at it, when they're looking at transaction. So here we have the types. So usually acquisition of property doesn't really occur with our grants, but it could on a HUD grant. So it's the date of the binding commitment or the binding contract. That's when the property is going to be either turned over legally and the binding is there, or that there's going to be construction and everything. That starts your obligation date, and that's when you can have transactions that might be on your award. Now, the reason I say might, let's say for acquisition of property, it may be before the grant period, and if that's true, then it may be unallowable. It may also be a situation, especially with HUD grants, that you may ask for prior approval from HUD to include the beginning of the cost, even though it's before the grant. And if they give you the approval, then you're fine with the allowability of the cost. Personal services for employees, and then for contractors here, typically for employees, it's when the services are performed. So to me, that's when you have the onboarding, as we call it, when you bring in somebody in and you start the whole paperwork of W-2s, insurance, all those other things, giving them the policies and procedures and everything else. That's kind of your representation of when services are performed, and that's when the obligation date starts for that employee, which then hopefully meets with the period of availability, so they're allowable to pay for any of the cost that happens there. On the contractor, in this case, contractor could be professional services, other things like that. The obligation would be, the date of obligation is the date that the binding commitment, the contract, other things that bind you to that contractor or vendor. And that's the time when the obligation date starts in that situation. For travel, travel is when travel is taken. And this may be confusing sometimes with registration when you're doing travel for training. Typically, registration and other things like that happen where they're, first of all, on the budget as other DOE for registration, other things like that. That may be different from the date of travel, because a lot of times in conferences and other things, you may have an early day special to sign on and you get a discount, or it may be that you have to commit by X date, and that's typically before the travel itself. So the expenditure and the obligation for registration would be at a different date than what your travel is. Now, once you do go out to travel, that's what the supporting documentations, and that's what you're obligated to your employee to reimburse back. So that's kind of your date for obligation. Rental and lease properties, it's usually at the time when you actually use the property or occupy the property. Now, there are issues. I know we had that situation when we moved. We went into a new property, and we need to have build out by the contractor and everything to have it available and ready just for us to be able to go in there. In those cases, you can have prior approval by your funding agency to include that cost of build out or other things like that, that could be an allowable cost. But I would always, when you're talking about that situation where it is before the actual use or occupancy, I would prefer to have people have a documentation that it was prior approved for that kind of extra cost and everything. And that's just having a discussion with your grant manager and having an email that allows for that to be the allowability of that part. A utility service is actually when it's been received, the services have been received. So whatever the invoice is on that bill would show that part. And then finally, what we have is period of availability. That's what I've been talking about, which is the beginning of your grant period to the end of your grant period. Now, for state grants, if you have an OVAG, it would be September 1 through August 31st. That's the date of your availability. That's the date of your grant for any allowable expenditures. If you have a federal grant, let's say like VOCA, it would be October 1 through September 30th. That's the whole date of availability for all the expenditures to be allowable in that situation. There are certain times where other grants, federal grants, might start on a calendar year. So naturally, that grant would be January 1 through December 31st. So you may have different dates of availability within your own organization because of the different types of grants that you have. And that's the thing that kind of works when you're doing your record keeping and ensuring about the actual costs and everything, is figuring out what that transaction is, who does it go to, what funding agency, what is the period of availability? Because I've seen situations where, getting a little bit confused, the grant period may cause a finding because, programs will add some additional dollars that came in after the period of availability. And that might be the situation where an auditor would find you for either posting for expenditures prior to the grant or after the grant. Now, there are some situations where you have a bill that comes in for the services, and at that time, it's within the period of availability, the cost is allowable in that situation, even though it might be right at the time that you're now moving over to a new grant year. The expenditure actually happens during the period of availability and would be allowable, even though you might be writing the check and everything in the following month. That's okay in that situation. So this might help you to kind of figure out, okay, what transaction do we have? Does it meet when do we have it as an obligation, and then does it meet the period of availability? And if we're going to have something that's outside of that part, we should discuss it with our funding agency, because there is a lot of times that program can get prior approval from agencies that fund you that for whatever reason. So that's a way to kind of mitigate some other findings that we have. So that's kind of what we have for how to mitigate your audit findings or monitoring findings or other things. We can take questions at this time, and we can have any kind of discussion if you'd like on this. Again, any questions we will answer at this point, and
Okay.
we will also answer questions after this by email, and we will put everything onto a FAQ document that we will send out to everybody.
Okay, Mark,
Yes.
I have about 11 questions. The first question is regarding the 750,000 threshold. The question is the 750,000 threshold in federal expenses across any and all federal grants in a year, and not 750,000 expenses in a single federal grant?
Okay, for the $750,000, first of all, we need to make sure that we segregate federal dollars from state dollars. So then, once you get that done, now within your organization's year timeline from the beginning of your own organization's year, let's say it's a calendar year, people start, their organization starts January 1 and they end in December 1. Now, more than likely, there's a lot of expenditures that are happening between a couple of different grants. Let's say you have a VOCA grant where by that time you're already starting a new grant, but your books actually show part of the older grant at the same time. You would combine anything within your agency's timeline and calculate that. Now, typically the CPA is going to do that for you. And what they'll do is they'll say, okay, with all the, let's say you have 3 federal grants, and one of them was an older grant that just ended in, let's say, September 1, but now you have the new one that's coming up in October 1 all the way up through December 31st. The auditors would look at that and see what total expenditures you have with those kind of federal expenditures. And if it meets the $750,000, then they will tell you they'll need to perform a single audit. And the reason why they do that, and we prefer them to do that, is that they will be able to calculate the expenditures for you. The big part of that is that with a single audit, it costs a lot more than just a financial audit. Again, as I say, a single audit is made up of the financial audit, which is your books and records, and giving an opinion on the financial statement. But then the second part of the single audit is the compliance, which takes more time. So naturally, it's going to cost a lot more to do that. Now, one of the reasons that you would have the CPA do that is that they are required by their ethics laws. I know I'm involved in that situation. I'm a CPA, and I could have issues come up that if I'm over auditing because I want more money and that the organization didn't meet that threshold, that would be a severe consequence to my license in one sense. So there's kind of that catch-all or safety valve that, you know, you've got the CPA that has to go by their rules and regulations, and they will tell you right off the bat whether, oh, this engagement will only need a financial audit, or this engagement will need the single audit, which is the financial and the compliance part. And here's what our bill will be, because now we have that kind of the number of hours that it's going to take to perform a single audit will be that situation. Hopefully that answers the question.
Okay, number 2 questions from Amanda Buenga. If a position is 100% funded by one grant, do we still submit timesheet?
Yes, there is ways to do that. whether you do it as a certification. It used to be in the old circulars, it was, you could do a certification, and in the old circulars, it used to be that only governmental units could provide a certification that the employee is 100% funded by that grant. And it was on twice a year that would be the requirement to meet. Now with the new 2 CFRs, they've allowed more flexibility to all entities. So let's say governmental units, nonprofits, higher education can actually use that feature. What I would suggest, if you're going to do something like that, that you draft up kind of a form and that you would fill it out monthly. So that way, that shows good internal controls in your process that that employee is working, let's say March, and I would put down the number of hours that they worked, and then that they would certify that all the hours that they worked on were for that grant and X grant, whatever it is, with their signature and then with the supervisor's signature. So you don't truly have to go through a timesheet in that sense, but I would make sure that it would be monthly for the main reason you want to ensure to the funding agency, but more the auditor of that funding agency, that you've got good internal control in that situation. Now, the careful thing about that is there are times where if you're 100% funding from that grant, you need to make sure that that employee is not doing something else besides that. If it's 95% of the time you're working on the grant, but 5% of the time you're working on unrestricted or other things like that, then that's not afforded to that employee, because it's really two funding streams in one sense, unrestricted and the grant. So it's nice for record keeping, but sometimes it's hard for when you're talking about workflow and other things of that employee can only work on that grant and can't really help with other parts because they're dedicated to that. Okay.
Okay. Okay. Number 3 question, Kathy Phelps. Is asking, overtime to be allowable, is this new?
No, it has been there for pretty much most of the time. I don't think there has been a true part of a VOCA grant or let's say anything from the Attorney General's office that they do not pay for overtime. Now, there might be situations that I may not know of that if you have prior approval from your funder that may allow for that, but on consensus, most of the grants don't allow for that kind of ability to do that. You would have to talk to your funder to make sure.
Okay. Number 4, on mileage, because advocates may be going to the client's home, we have verified with our largest funder that the advocate can put the block number and street name rather than exact address on advocate's personal mileage log. Because if we have to submit that to the state/federal auditor, that may be subject to open records. We put the exact address of other public places.
Yeah, I can see where there is an issue there. I would probably just, when you say point to point, you may say point to point, let's say on a Google sheet, the address that you're going to. So it would be from the office to that address, and that's all that needs to be done. Now, you do not need to submit that type of paperwork in your FSR to your funder unless you're under a special condition that requires you to provide that to the funder themselves. It's typically when an engagement happens, which is either your external auditor or your auditor from your funding agency itself. They will probably then ask for that type of stuff, but they are careful about giving away personal information in that situation. So I would do it by point of contact, point to point, not by the individual. And some software now does that for you. So you can just type in and it will give you in an app the number of miles that it goes to. If y'all have any question about that part, I can talk to you. You can email me and I can provide you where to go. I know there's one or two programs that use that, and I think it's very useful in that situation. And they're able to download that information into, a software package, either Excel or something like that, as that's kind of supporting documentation for calculation. Hopefully that's helpful.
This is from Rwanda, Howie. We were told overtime could be paid for direct services instances. We try to avoid OT at all costs, but sometimes it happens, especially for emergency call-outs for advocacy later in the week.
Right. I think that's one of the bigger issues. It's kind of overtime and kind of, in one sense, comp time. I know a lot of programs have used, governmental units have used that to provide comp time for people and allow for that to cover for when people go over that part and use comp time. The labor laws don't really agree with that, and which you'd kind of shy away from it. What I would do is to kind of work with your employee, and it would be with your supervisor. And one of the things that in the policies and procedures is that any one employee that needs to go through overtime needs to get prior approval before the overtime can be used in that situation. And what a lot of organizations have done is that they've talked to their employees and said, well, when you're getting close to those 40 hours and you see that there's something that can come up, we can always flex within that week so that the employee has some flex time. Let's say they're going to have to go 4 hours past the 40 hours for whatever event or situation. Then they would flex 4 hours at that point. I know at TASA we've done that. And, I know when I've gone out traveling or other things like that and working with boards at night, I might have additional hours of, let's say, an 8 hour after doing maybe half a week or a week of work with an organization. Then I would know that at the end of the time when I'm coming back home and I have 8 hours of overtime that I potentially need to do, then we would then just do, take the time off as in that situation. So I would just include that as time off in that situation, flex time as we call it. So you could see in my timesheet, let's say on a Friday, because I've already accrued all that stuff and have now gone close to the overtime, then I would put flex and then X number of hours for that day as the flex. And when the total timesheet comes out, it will reconcile any of those things because you've actually taken off for the additional hours. That's one way to take care of it. It's harder, I understand, with advocates and others because victims come at different times and you can't set a 40 hour, then you automatically stop. But there's ways, and I've seen programs work with employees to figure out how to manage that.
Okay, another question from Rwanda. She says, we are moving to contracted counseling services this year. Could you follow up with me later regarding this contract management form. Contracting for counseling is new to us, so we want to make sure we monitor correctly.
Yes, we can do that. What I would suggest is if you just go ahead and email me directly, I'll have your information at the same time. I can provide some of the template again that you hopefully have, and we can have a discussion by phone or Zoom or other ways about that. And also it gives me time to, as we talk and discuss that I can look and provide you just that part of the 2 CFR that deals with contracts, so that you don't have to go over the 300 pages. I can just provide you, here's the citation, here's the area, and then look to see that you're in compliance with those parts. But yes, we can do that. And my information is at the front of the presentation. It's on the back end of the presentation. In fact, there's my information. So you can email me, and then later we can have a conference call. There's my direct line.
Okay. Number 7, Tiffany Smith. On the single audit threshold, VOCA through the OAG is considered federal, right? Or would those be state funds? Trying to figure out if we are going to cross the threshold with our VOCA or OVC grants.
Okay, one of the things is that on a federal grant, there is a CFDA number, Federal Domestic Assistance number on there. And that's what the auditor will be looking at to ensure that they're calculating the expenditures that are for federal grants. So that's one of the first things that they do. Now, in the governor's office, they may have multiple federal grants, and that's okay. You should be able to look on your award document for that CFDA number, first of all, to know that whether it's a federal or state. State does not have a CFDA number, so like the Attorney General's office will not have a CFDA number because it's a state funded out of the comp fund, the state comp fund in that situation. So it's kind of, you need to determine where are the grants originating in the sense of the dollar sources. Are they originating from the federal government that's passed through to the governor's office, and then the governor's office passes it through to the local programs? Or in some situations like the Attorney General's office, most of their dollars come from state funds, either the comp fund or a state funds, and then they distribute it out to the local programs. For the OAG, I think one of the few federal grants that they do have would be the RPE, Rape Prevention Education. That would be a federal grant, and on your award, it would give you the CFDA number. Now, the Attorney General's office has HIDA grants, which are a federal grant, and they provide that, but that's typically to police stations and DAs. So that's a difference. But so where it has originated in one sense, maybe you can have a clue by the funding agency, but most of the time it's needing that more information. And that's what your external auditor would be looking for, because they need to put that in their footnotes of the financial statements where the dollars are coming from. They'll say either Office of the Attorney General, OVAG, state funds, or in there they would say VOCA, Governor's Office, CFDA number such and such. They would split that out on the footnotes, and that's how they make the determination. And that's why we prefer having the CPA firm making the determination of whether you meet the threshold. I hope that answered the question. If not, go ahead and email me and I can discuss it with you further at a later time.
Okay, this one is from an anonymous attendee.
Okay.
Is a procurement worksheet necessary for all small routine purchases of any amount, or would a thorough GL description coupled with receipts, which have been handwritten details of the reason for the purchase, be sufficient?
Well, there's kind of a difference in one sense. Depending on the procurement methodology, like the micro purchase, there's not too much that you need to do for support. In that situation, what I would do is that, let's say, there you don't need, as a micro purchase, you don't need competition or competitive grant, first of all. You truly don't need the analysis of cost in one sense, but you would need to have some reason why you decided to pick that vendor over somebody else. So that's why I think that procurement template is a good template to use in that situation, and you would just describe it. So let's say you're doing a laptop, one laptop for one employee. That would be under the micro purchase, and you decide that whoever is purchasing it, either the supervisor or the financial manager or whoever is doing that, might decide, well, we decided to go with Dell. Well, and you went on to the website for Dell and looked at that cost. That's about as much documentation that you need for a micro purchase to support why you awarded it for that. Now, typically, the government, federal government, more than anything else, would like for you to not use the same vendor all the time. They prefer that, micro purchases that you would use it in across the board, primarily just so that it spreads the dollars out to vendors and to help the economy in that situation. So if you're using, let's say, Office Depot in one sense, and then one time you might want to use Staples. I think I'm not too sure if they're still around, but those kind of things, you could make that determination in one sense on that. But for micro purchases, it would only be a very small part of that. And I can always send out that kind of information again on the white paper about procurement. I'll probably need to update that now that there is that situation for single audits that can actually bump it up to $50,000. So it might take a little bit before I can send out a new white paper on procurement. Okay.
Okay. Now, the same person has another question. We purchase small items like groceries for individuals in our short-term housing program. Do we need to have a procurement worksheet for things like this?
Well, I tend to be conservative in the sense of compliance, that I tend to tell people, don't open the door for an auditor to ask questions. Have the documentation already there, specifically for a micro purchase, because there isn't that much documentation you need to do to justify. And I find that it's much easier for programs to just go ahead, put it on paper. Here's your justification. I looked at this. That's all I need. And that closes the door for an auditor to ask other questions. Now, when you get into anything over 10,000 up to 250,000, now you're needing to do a little bit more. And even there, that's still not a competitive bid. So you can look at it in the sense that, let's say it's now going to cost you $50,000 for whatever generators, other things like that. And you could easily say, well, I went out there, I looked at several different vendors that provide generators and looked at their reviews and whatever else, and decided to go with such and such. And that would be enough. But at least you show the auditor that you've looked at a couple of different vendors before you picked one. I hope that's helpful. If that's not helpful for the person, then you can always email me and we can discuss it a little bit further.
Okay, the same person has another question. It says, purchasing one laptop would obviously be a micro purchase. But if I purchase 15 laptops, 1,000 each, that would be considered a small purchase. That would be considered a small purchase, is the question. Is rental property used by clients in November and paid for by our agency this week, October, allowed to be charged to a HUD grant starting November 1?
Okay, so let's say you're in the facility and you're using the facility in that first month, but the bill doesn't come to the very end of the month and you really don't pay it till the next month. Well, your obligation was actually when you actually used the property. So if you were charging that in, let's say, the October instead of November, you would be okay because that fits with GAAP, which we call Generally Accepted Accounting Principles. And that's matching the expenditure to the time that the obligation happened.
Okay. Number 11, Caroline Freeman. Is rental property used by clients in November and paid for by our agency this week, October, allowed to be charged to a HUD grant starting? The same question.
Kind of the same question.
Yeah.
Yeah, what we're talking about in that situation is that it's about the time you should look at the date of obligation as when the expenditure would then happen, in other words. So let's say you bought a laptop and you ordered it on November and it came in December. You're actually obligated for that and you've actually expended it because you've obligated it in November. You could go ahead and request reimbursement for it, even though the cash in the sense of the check is in December. Because again, we're talking about GAAP, Generally Accepted Accounting Principles. When was your organization liable for the transaction, and then that would be the expenditure time. The cash actually may be just a little bit different from that by a month or a couple of weeks or anything, but the expenditure, if you were putting it onto your financial statement, would be when you obligated that, because the organization's going to have to pay that obligation at some point.
Okay. From Fred Gonzalez, the question is there a standard compliance report?
Not exactly sure what the question means. I know that compliance, in one sense, you should look at it by your grant and your funding agency, because there are differences in allowability in that situation. Here's one example. I know that for some time on VOCA would allow you to go out of state to do things. And you could charge that expenditure. On the Attorney General's office, which was with state dollars at the time, they would not allow for people to go out of state. So the compliance there, because it's state dollars and they had that determination, because at that time they were concerned about funding, decided not to allow out-of-state travel. So in their compliance could be different because of the two different things. One is a federal, and the federal award allows for that, and then a state, which is state dollars, may not allow for it. Then there's another situation that could happen is even with two federal dollars awards, there may be some reason why another, even within the same funding agency, may decide to limit some expenditures in one grant versus another. So you really need to, when you're looking at compliance, you need to first look at your award. What is allowable by that award and everything else in order to figure out what your compliance report might be in that situation. And again, if you need to provide additional information so I can figure out exactly what the question would be, just contact me by the information that we have.
Kathleen Sullivan wants to know if she can get a copy of your white paper for procurement.
Yes, I will probably be, like I said, I need to update that because beginning November, there's going to be that additional part that allows for single audit people that are with a risk determination of low risk added into the documentation, the white paper that I have. So you can always email me, but I will more than likely take and send it out to the different listservs that we have, that white paper. But at any time, if you need some information, just contact me directly, email or by phone.
Okay. Aaron Claypool has a question. He says, let's say an expense incurred in January and is put on general ledger for January as it should, but standards posed by the guarantor prevent you from submitting that expense for reimbursement until February. How best do you present the GL on the February billing that includes items from the January GL?
Well, I guess in that kind of situation where people are concerned about the expenditure actually happening in 1 month because of the obligation, but the payment actually happens in the following month, more than likely in your financial records, you would have an expenditure, but you would have an accounts payable that you would have to pay that at some point. So you could always go by the situation of if you want that expenditure and you're concerned about not having it approved because you haven't actually paid for it, then the supporting documentation would be your kind of debiting credit and then taken out of the accounts payable at the same time. So crediting in that situation.
Terry Chapig wants to know the process for signing up for listserv.
You have my email on the document. Just send me an email and say, please add me to your listserv and let me know what type of grantee you are. If you're with the human trafficking, then I'll put you on that human trafficking listserv. If you're one of the 19 programs that we actually administer for the governor's office, then that's a SAPS grant and just put SAPS on it. The best thing is to put your organization name, your full name, and then your email address, and you can always put your phone number. So if I'm not sure which listserv, then I can always contact you by email or by phone to ensure that we get you on the right listserv. The last listserv is called the financial listserv, and that one is for all of our membership plus others that want to be on that. So if you're not a human trafficking, which we call I think it's called the Child Sex Trafficking CTS, we would then put you onto the financial listserv, which is kind of our general listserv.
Okay, that's all the question I have.
Okay. Well, again, thank you everyone for coming to this webinar, and we will take any of the information that we have right now. We'll start working on that, answering the questions in a Word document. And if you have additional questions that you may want to provide, just email it to either, well, to me or to Finian in that situation. We will then work through it. What we'll probably do is if you email us, we will answer you directly about that question, and then we'll take the question and put it on the FAQ document at that point.
And also the survey.
Oh yes, the survey, I think Crystal had put it in there.
It's on the chat.
Okay, so if you don't mind, go to that link and provide us with the kind of evaluation. The very last question on the evaluation is asking for other topics that people would like for me to provide at that time. And we will look through all that and decide what kind of webinar we will do by the topics that are out there. Also, in that situation, if it's a specific topic that you want me to work with you, you can always email me directly and say, I need information on this topic, and we would work with you directly in that situation. So we can do it two ways. One of the things, because we're doing this webinar for the governor's office, we're required to provide them with first the registration list, but second, the evaluation list. So if y'all can do me a favor, go into the link and provide the evaluation. We just send it directly to them. So I try to look at that after the fact and see if we can improve on our webinars as we go along. Again, thank you so much for coming to this, and I always look forward to working with each of y'all. One of the questions, or not a question, but a discussion I've had with programs when they've come directly to me, that I'm on a grant and Finian's on a grant, just like everybody else. We have to meet our metrics. So whatever we have on our application in that situation. For our grants, we're providing technical assistance. So you're not bothering us when you ask a question. I always wish for people to ask questions. It helps me at the same time because I can put that into my metrics that I've met my award at the same time of our grant at the same time. So this is a good time to be partners. You can help me as much as I can help you at the same time. And same thing for Finian. We work together and provide that kind of information to everybody. And I think without any other questions at this time, we can go ahead and just end.
Hold on, Mark.
Oh, one more.
Yeah.
Okay.
It says, I have, from Caroline Freeman, it says, I have already done the survey. Maybe is the link from the HR timesheet training I attended last month.
Oh, so it says the timesheet on there. We need to, I guess when we sent it out to get the link, it didn't change the name of the thing. Go ahead and use that and we will fix it on our end. It should say federal audit findings, but if it doesn't, we will fix that and notify the governor's office about the discrepancy.
Let me make sure. Respond. He said, thank you. He should appreciate it. So he's okay with that.
One of the other things, we have sent out links of our recordings. We're still working on trying to get most of ours recordings into our YouTube channel. I know that they're modifying the channel, and hopefully what they're going to do is on our YouTube link, there'll be a section that will be for compliance, or we might have it called grant compliance or something like that. And you can go in there and look at all of the recordings that we've done before. Some of them were done in go-to training, and this current year has been with the Zoom. So there might be different formatting issues in that situation, but you can always go in there and look at that. I will be sending out to the 3 different listservs that kind of information as soon as we get that kind of redone in that situation. We're working through our process to ensure that we got everything in the right kind of area. We have a lot of training out there from TASA. There's human trafficking training. There's a lot of great training that's out there. But what we're trying to do is now make it easier for everybody to go in and look at either kind of programmatic stuff, and then grant compliance stuff, everything else like that we have. So we're reworking our YouTube channel at this time.
Mark, the attendee, anonymous attendee, her question is, where might we be able to access the recording from the webinars?
I'm sorry, I couldn't hear that. So where
might we be able to access the recordings from the webinars?
Oh, the recordings? We will be sending out the link to that at some point. Right now, again, this is going to be recorded. We're going to have a part. The link will actually be into 2 different places. One, we will send the link to the governor's office, and the governor's office will have a recording. I think they would be providing it to their grant managers. So you can ask for that link from the governor's office, from your grant manager. The other part is we're working on our own side, and we will then have the YouTube link in that situation, and we'll send it out. But we will send it out to all attendees, or we might even just send it out to all of the listservs, because there's a lot more people in the listserv than there are that actually attended at this point. But we'll get you the information. It may take the end of this week or next week.
Okay, I think that's it. That's the question I have.
Okay.
Yeah.
Okay. Well, then I will be getting off unless anybody else has any questions. And again, my email was there. It's mhernandez@tasa.org. And you can just ask questions there too. I know that like when I go to a doctor's office and I have all these things I want to talk to the doctor, immediately after I close the door and have left the office, I'm going, oh my gosh, I forgot to ask him this. I know that happens a lot of times. It happens to me. So when we finish and you have a question, go ahead and just send it to us and we'll take care of it. Okay. Thank you again. Y'all take care and we'll see you. Bye-bye.
All right, thank you.